This video is not about hype stocks you already see on CNBC every day. It's about the quiet side of the AI boom, the companies building the pipes, power, hardware, and data backbone that artificial intelligence actually runs on. Because while everyone is chasing the next big AI app, the real money over the next decade is likely to be made in infrastructure. And today we're looking at 4 small-cap AI infrastructure stocks trading under $10 that most investors still haven't noticed. Not because they're bad businesses, but because they operate behind the scenes where smart money usually enters early. First, it's important to understand why AI infrastructure matters so much. Because every AI model needs massive computing power, energy, data storage, networking equipment, and specialized hardware. And demand for all of that is exploding as AI adoption spreads across healthcare, finance, defense, cloud computing, and enterprise software. And unlike consumer apps that rise and fall with trends, infrastructure companies often benefit from long-term contracts, recurring revenue, and steady demand growth. The first type of company investors should pay attention to is AI-focused data center and power infrastructure firms. Because AI data centers consume far more electricity and cooling than traditional cloud systems, and smaller companies operating power solutions, grid optimization, or data center-specific services can see outsized growth as hyperscalers expand aggressively across the US. The second opportunity lies in networking and connectivity providers. Because AI workloads require ultra-fast data transfer, low latency, and reliable communication between servers, chips, and cloud platforms, and some small-cap networking hardware and optical component companies are already seeing demand surge from enterprise and government contracts while still flying under Wall Street's radar. The third category is semiconductor support and equipment companies. Not the giant chip designers everyone already knows, but the smaller players that provide testing, packaging, specialty components, or manufacturing services essential to AI chips. Because without these companies, advanced AI processors never make it into real-world systems. And as chip complexity increases, these niche providers become more valuable, not less. The fourth overlooked area is AI-driven defense and government infrastructure contractors, where small-cap firms supply software, hardware, or data systems tied to national security, logistics, and surveillance. And with US government AI spending accelerating, these companies often benefit from long-term funding visibility while staying under the retail investor radar due to limited media coverage. Now, it's important to be clear, small-cap stocks under $10 come with higher volatility and risk, and these are not overnight lottery tickets. But when you combine strong balance sheets, growing AI-linked revenue, real contracts, and a clear role in the AI supply chain, you get asymmetric opportunities where upside can significantly outweigh downside over a multi-year horizon. The key is patience and position sizing, because infrastructure plays don't always move fast. But when demand hits, they tend to re-rate quickly as institutions step in, and that's often when retail investors realize they missed the early phase. The smart approach here is to track revenue growth tied specifically to AI. Monitor insider buying, watch for new contracts or partnerships, and pay close attention to earnings calls for language around AI capacity expansion, data center demand, or government spending, because those signals usually appear before the stock price reacts. The AI revolution is still in its early innings, and while mega-cap names dominate headlines, history shows that some of the biggest percentage gains often come from the smaller companies quietly enabling the entire system. So if you're looking for under-the-radar AI exposure without paying premium valuations, these types of small-cap AI infrastructure stocks under $10 deserve a spot on your watch list. Not as hype trades, but as long-term bets on the foundation of the next technological era.